Good afternoon. Welcome to Boom, Doom and Zoom. I'm Paul Rickard, and joining me today, of course, is Peter Switzer. Peter, welcome to the program.
Thanks, mate.
Well, it's been a big morning on the market. We've had reports from Woolworths with the off-market share buyback, Appen, which the market didn't like, A2 Milk, which has also copped a bit of flack. What's going on out there?
Yeah, and you can't mention Tyro, but Tyro also came out, and at least the market liked that, so that's good. I think both A2 and Appen are companies that really need the world to be reopened and back to normal. A2 in particular needs tourists coming back and all that sort of stuff to help their situation. I think they still remain a takeover target. It's going to be interesting to see whether something happens there. But in the case of Appen, they actually have taken on a new business called Quadrant, which obviously they believe will help their revenue going forward. But they are a company that I think is a reopening trade type company, and the reopening isn't sort of fully there yet.
Well, what's interesting, I've got a question in already about them, but I'll come back to that in a sec. I probably should just start with the obligatory disclaimer, of course. We don't know anything about your particular financial circumstances, objectives, or investment needs. So if in any doubt, consult a professional advisor. And what we might say might be suitable to someone asking the question may not be suitable to you. So that's why we always place the caution on the on not knowing whether it's personally suitable to you. Secondly, you can have two ways you can ask questions. You can click on the raise your hand button. We'll unmute you and you can ask your question, or alternatively, type it into the screen on the Q&A panel and the questions will come up in front of me. So the first question came from Chris. He says, hi guys, this is time to cut the dead wood with Appen and A2 Milk, perennial underperformers. So we might just get you to expand on that Peter.
Yeah, I think that's a fair question. And, I've got to say, in all honesty, I'm sort of reevaluating whether I want to hang on. And I am going to hang on, but I know it's kind of a risky play. I still think A2 and Appen are good companies. And, the coronavirus is not helping either company. So I take the analysis. I've got to say my exposure to both companies is quite small, so it's not really a big risk. And I do think when they do rebound, they'll rebound reasonably well. I haven't looked at, I know Citi has actually repeated its view on Appen. That's an $18 or so target, Paul. But let me quickly have a look at what people are saying about A2. I would say that A2 would also have a few companies that would be willing to support it, but even these guys aren't really going to see. At this stage, the target consensus for A2 is 2.6%, pretty small, and maybe a sign.
Yeah,
they're not willing to.
I haven't had a good look at the Appen result. I thought the A2 one was sort of okay. I mean, it was the market has run up, and also again, Appen ran up $1 yesterday. I don't know on what on. So you've got to look at put the week together.
On the Wise Tech game, they got all the tech benefits.
So I mean, A2, okay, I mean, it's I think the one thing I took out of the A2 Milk was the declining birth rate in China. Now, that's not new news, but they said it was particularly COVID related. So they haven't all been snuggling up there in their lockdowns. In fact, they've been worried about the economic situation. So and then also, I guess, a bit of the work they're doing on their growth strategy, Peter. So they're obviously rethinking, I think, a few things, and they're going to have an investor day in late October. So we're probably going to see the new parts, some more stuff from A2 coming out of that. So I'd be inclined to hang on to A2 Milk. Appen, I don't know, look at it, revenue was down or flat. Yeah, it's a company I've invested a little bit in, not a lot, and it's been disappointing. So it's on my review list. I'm not sure I want to put more into it at the moment.
On the situation as well, Paul. But I would also throw in, when it comes to A2 Milk, because there has been that rumor that it could be a takeover target. Selling it and seeing it spike $1, $2, or $3 from here would be really annoying. So I'm probably prepared to take the punt on that over the next 12 months on the basis that, so for example, let me go back to Appen. The consensus view was a 63% upside. So on that basis, even if they're only quarter right, there's a gain out there waiting to happen. But you're going to have to wait, and you're going to have to be patient. Simple as that.
Okay, a question here from which we did want to just cover up front on Archer Materials. We've had some very persistent, I would say, question about Archer Materials. I had a look at it today. I haven't got much news on it. You can see they've had a big spike. It's had a speed ticket from the ASX. The queries around its patent. That worries me a little bit. I've read the response. You got to do a bit more work on Archer Materials, and sort of you've got someone tonight, I think, speaking about it, Peter. Is that right?
Yeah. So all the stocks I said I'd look at on Monday was a little bit hard for A, reporting reasons, and B, I wanted to get Michael Gable from Firma Equities, my charts guy, to look at those companies in question. And so let me try and access my computer, because John has.
There's nothing there on Archer Materials, Peter. So
no. But I got.
Oh, okay.
Yeah, I've got a Word document here, and because John has dominated my screen with the chart, I can't access the list that I've got here. You go to the next question. I'll grab that list and I'll tell you.
So a question here from George on CLW and Tyro. Now, I'm not going to talk about Tyro, but just CLW. If we can just have a look at that, John. Yeah. Look, I know the company pretty well. Look, it's probably run a little hard. It's look, I reckon sort of its value around about NTA, which I think you'll find is about 490-ish. But it's a nice, good performing REIT, and I wasn't aware it was up at 516, but look, lower down is probably represents value. So I think you'll find that's where it is at the moment. It's pretty much where the brokers see it. It's a little bit above NTA. Tyro, do you want to comment on Tyro? That was up early today, Peter.
Yeah, well, I'm also, I've got an interview request in for the CEO, Robbie Cook. So hopefully I'll get him on the program tonight. I thought it was a pretty good report. I read it, thought, yeah, not bad. Considering this is a company that has to cope with the closure of the economy, cafes, restaurants, and all those sorts of things. So revenue's up, and I just think it's a classic company, like I do with Qantas, that will be a reopening beneficiary once we can go back to normal. I did note there's a news item that's just come through that by September 15, groups of 5 people who are vaccinated can start hanging out together. So I think we're going to start seeing less restrictions for people who are vaccinated, which ultimately will help, cafes, pubs, and all that sort of stuff. And that should be good for Tyro.
Okay. Question here from, I'm not sure who it's from, but it's from Kind Regards. What are your views on Janus Henderson, which is JHG? What are the broker ranges in relation to target prices? I'm a current holder. It's already had a steady run over the 6 months. So that's a fund manager. A lot of investors probably held those shares courtesy of one of the AMP demutualizations. I didn't realize it was up to $60.42. It has had a steady run up. And I guess the key issue for a fund manager like that are fund inflows. But let's see what the brokers are saying, Peter.
Yeah, I for the life of me, I can't find those. In fact, maybe John Bragg can dig them up, because it's what you sent me last week, John, for those stocks for the
JHG.
Yeah, but John sent me a list of 5 or 6 stocks.
Oh, okay.
So if he can access what he sent to me and read them out to us, that will give us a clue of what's on the TV show tonight. Okay, so it's what's the
JHG you're doing, right? Yeah.
AHG. No liking that.
Okay, well, look, I'll bring that up while we go to the next question.
What was Janus Henderson we're doing?
Yeah, we are.
That's
JHG.
JHG. I thought you said. Okay, I got it here.
Yeah.
All right. 2.4% downside. Target price $58.45.
Do you have the range there?
The range. No, I don't.
Okay.
On the mobile phone, it doesn't give it to you as well as it does on the laptop.
Okay, John, there was a question from Shabir, but that's gone, is it, in terms of the phone? Looks like that's gone. Okay. Yeah, we'll go back. Can we do Shabir?
Hello?
Yep.
Can you hear?
We can hear you. Yep.
Yeah, perfect. Thanks for taking my question. My question is around the market is currently at all-time high. Is it time to take a little bit of profit and keep some cash on the sideline for, especially moving into September, where the markets tend to come down a little bit?
That wouldn't be a bad strategy, Shabir. I'm not necessarily promising that you'll get that opportunity, but if you looked at history, you think September, October can be still tricky for the stock market. So yeah, taking some cash off the table and waiting for a buying opportunity is a distinct possibility.
Yeah, look, I don't disagree with it. I mean, I think Shabir, we're just going to take our lead from the US, and if the US doesn't do much, I think our market will go higher, because one of the things that's going to make it go higher is just so much cash around. I mean, we've got huge dividends which will get paid in September, October. We've got off-market buyback from the CBA. We've got off-market buyback from Woolworths. There's a lot of money to find its way back into the market just through the weight of dividends and buybacks and other things occurring, plus just the continued 0% cash rate. So look, if the US wobbles, we'll wobble too, and that's what I think you and I, Peter, are a little wary of. But and that's why we're not really actively putting money into the market at the moment. But I think if there isn't a wobble, we're going to go higher just through the weight of cash.
I don't think the sell-off will be big, Paul. Like, are we talking a 10% pullback? I'd be very surprised because of the reason you advanced. Lots of money around. And where do you put that money? Interest rates are so low, you'd be basically sitting in cash. So I just think I'm not expecting a big pullback. There could be a pullback, but I don't think it'll be a big one. I found those stocks, by the way, Paul. Pro Medicus, Star Pharma, Archer Materials, Lake Resources, and Hum. They're the ones that Mike Gable will be looking at tonight on the TV show.
Okay, a question here from Peter. Your thoughts on Event? It's EVT, and he also wants MyState, which is the Tasmanian bank. But let's look at EVT, Event Hospitality. Let's given what's going on in lockdown, it's done well.
It has done well, and I think a lot of people are buying it from a point of view of this is a reopening trade type company. It's always been a good dividend payer as well. Haven't seen the dividend in recent times. Probably would have to have suffered. But at this point in time, the analysts think a 1% downside. And I think because it is priced to perfection, I think.
Right. A couple of questions on Appen from both Bruce and I think we've done those. So I'm going to, if you didn't miss the start of the show, we covered Appen then. Okay. And then
the show it is on the web on the website, Paul, isn't it?
Yeah.
Do that. Yeah.
And tonight, your TV show, Peter, that's, of course, they can just get that by going to switzer.com.au, can they?
Now, the best way, I think, is just typing in Google, Switzer Financial Group, YouTube, and bang, it comes up.
Okay. All right. So Switzer Financial Group, YouTube, you'll get the program. It'll go to air about 5:30, 6 o'clock?
6, yeah.
Yep. Okay. So I think we've done Appen to death. So although those questions go back to the start of the program. Okay, just to finish to others. A question from Anonymous. Like the Anonymous, your thoughts on Ansell? They reported pretty well. I just haven't seen what's just done the last couple of days, so it's off a bit. It's been a high-performing stock. In other words, it's had a pretty. If we go back over the sort of the 2 or 3 year view, we'll see that Ansell's done pretty well. Can we get the 3-year view up there, John? Yeah. So thoughts on Ansell, Peter?
Analysts think 20% upside. You know what, Paul? I'm starting to think because of the nature of the world we now live in, we're all going to be very conscious about germs and all that sort of stuff. Ansell, I think, is probably going to become a company, particularly when it comes off the boil, that could easily add to your core portfolio and your core stock in your portfolio. Because I just got a funny feeling people are going to always be using their products.
Yeah, well, they're doing well. I mean, I don't know whether that's just a. It's interesting. I think trend I've noticed in the results this year is that the first day result sometimes can be a bit misleading. In other words, the trader's initial reaction to a number is not always what the fund managers are doing, and you're probably better off taking guidance for what's happening on the second day. To see where the money's going. So there've been quite a few results that have been a little negative on the first day and turned around, but I think you're probably just seeing profit taking on Ansell. It's had a big run up over a period of time.
Yeah, can we, John? You put the longer term chart in?
Yeah, we've got the 3-year up there. So
That's
yep.
3.
Okay. Let's go forward to another stock from Anonymous. A few of these. This is a stock I know Tony Featherston really likes, Life 360. It says reported very ordinary financial results, yet went up 5%. That's maybe a company we should really refer to Tony. I know he's been very bullish on that company for some period of time.
Yeah, and it's a company that really deals with, it's not covered by the analysts, pretty small. It's kind of dealing with the modern family situation and the support that they need, all this sort of service and stuff. Big in America, that kind of company, and it probably has a future. As you often say, Tony's a pretty good judge.
Yeah, it's pretty impressive price graph, that one. Yeah. Okay. Newcrest Mining is down again today. This is again from Anonymous. Thoughts on how it performed the back end of this year? Well, tell me where the gold price is heading. I mean, I'm putting a bit of gold into portfolios at the moment because I think there's more upside, just because there's more downside and things like, with people suddenly at some stage getting worried about the US dollar at some again. But what do you think, Peter?
Yeah, to me, it's an investment now, but you got to wait for it to really deliver. Analysts think 24% upside. I like Newcrest for this reason. It also has exposure to copper, and that gives it, some relevance to the industries that will benefit from a boom in manufacturing, electronic vehicles, all those sort of things. So I think it's probably the good one to play. But don't expect a return instantly overnight.
Okay, let's go to the phone and a question here from Lloyd. If we can unmute Lloyd, John. Are you there, Lloyd? Okay, still showing as mute. So
hello. Yes, I think you can hear me now. Thanks very much for your program. I always find it very interesting. Especially, and one of the articles you did recently, Paul, on the CBA buyback, that's changed my attitude to some shares in CBA. But my question is about Helios, HLS, and I've ridden this up from $2. It's now up to $5. I'm wondering if it is just as a result of its involvement with the COVID environment and the healthcare environment that we're in at the moment, or whether there's any longer term future for the organisation. Thank you.
I think I still own some shares in Helios. I didn't know it was up at $5. I hadn't even picked that up. So Lloyd, thanks for shows you how often I watch some of the stocks in my portfolio. Peter.
Yeah, analysts think 8% downside, Lloyd. There's a really interesting story around Helios, and I interviewed a techie kind of guy on my podcast. John Bragg might remember when it was, but it seemed like it was last year. And he made the point that Helios was the only company in Australia that actually has this access to that gold passport, the vaccine passport, which ultimately will be accepted around the world. The fear is that if you just go to a GP and say, and the GP note says, yeah, you've been vaccinated, well, anyone can make those up. but there is actually a protocol which apparently Helios has access to. And I think that partly explains why it's had a pretty good run up this year. Also, of course, it is involved in pathology and stuff like that as well, Paul, isn't it?
Yeah, I mean, look, I guess that's part of it. I mean, Sonic's got sort of explaining the same sort of stuff. I don't know. I'd be inclined to think about profit taking. I still don't really like. I mean, I've been a Helios shareholder too long, so I guess when you see these things back in the black, you sort of think, yep, there's been a bit of pain over the years. But look, anyhow, I think we'll take what the analysts say, which is they're probably seeing as pretty fully priced. Peter, is that right?
No, it's 8%.
Okay. So David says, I had a massive profit in AGL, held it for years, let it ride. It's now showing a loss. Well, it'd be a big turnaround. What do you recommend? Buy, hold, or sell? I got asked this question, and you'll see that in the Switzer report today. Look, I think if you can wear the pain, hang on. If you can't, well, it's a different story. It's not much is going to happen to AGL. It's reported it met expectations for this year. Its forecast for next year was weaker than the market had probably thought. There's been a little bit of pickup at wholesale electricity prices. There's a bit of talk in terms of the government. You'll see the deal going on where the traditional power generators want to be paid to keep some of these generators open. That would be a positive for AGL.
Yeah.
They're going to split the company in two. I think that's a positive, but that's a year away. It's in the unloved category, and it's hard to see what the catalyst in the short term to take it a lot higher is. That would just be my caution.
Yeah. And Paul, I think you always have to say, okay, what is the loss? What is the current share price? Is there a company out there that you're better off putting that money into that will rise faster than the one you've hung on to? That is always the analysis you have to do. If you think there are better companies out there, well, you're probably better off selling and going somewhere else. But if there's not, you're staying there. I think there's upside for AGL, but I'm not sure how much upside.
Yeah, the analysts have got about a target, and not much higher than where it is, about 733. So you taking notice that. Hi, Peter and Paul, your view on the new Westpac hybrid. I think I covered that last week, Peter. Look, it's okay. It's longer than most other hybrids. I think it's about 10, almost 12 years to the exchange date and about 10 years to the call date. That's my only hesitation. But the, 2.9%, you're going to be in market for a long time. It's at the low end of where hybrids have been historically, but not where the market is at the moment. That's my only hesitation on the Westpac hybrid is just the term. Yeah. But apart from that, in terms of capital ratios and everything, I think, the risk there is so limited. Okay, another company, a company that did report well, went for a big ride, was Nanosonics. Peter, we get a lot of questions about Nanosonics.
Yeah, I hope we never turned anybody off on Nanosonics. I expect because of their big rise, they're probably expected to go down. I think that is the case. But it's certainly, that now the analysts think it should be down about 8.4%. But it's a company that is, you can see from that share price has really impressed the market, and it has been higher. It's over $8 at one stage.
Okay, a question here from Chris: are you buyers of BHP after the company goes ex-dividend? It'll be it's about 275 Australian, I think, roughly from memory. And that's thanks, Chris. So it'll drop about that much, maybe about $3 when it goes ex. I think it's the next couple of days from memory.
Yeah. If I didn't hold any BHP, I wouldn't be afraid to buy after it goes ex-dividend. But, there's still at pretty elevated prices, and within 2 or 3 years, you kind of expect iron ore prices come down, economic booms coming off the boil. So, there's only probably the dividend will be good for next year, won't it, Paul? So if you want to buy it for the dividend, probably another year's worth of dividend there. But
yeah, I'm not with you, Pete. I mean, I sort of play the resource stocks. I go overweight when I think it's towards the bottom of the cycle and they're really super cheap, and I sort of play them basically index weight until I think the trend has changed. I'm not really. I'm fully weighted BHP. I don't know. Will I need to buy any more? I think I'm not sure the trend is over long term. We've had a huge drop on iron ore, and you could probably say the trend's changed there, but the other commodities, copper and so forth, I think that's just a pullback. So yeah, I mean, look, I think there's going to be opportunities when they go ex-dividend. I mean, the drop in the price is really about the narrowing of the discount between London and the Australian listings, and that's what's really happened, is that people have, because they're going to be converted at parity, the gap has closed, and so people have been, buying the London shares and selling the Australian shares. It's just a pure arbitrage. That's really what the BHP drop is about. I mean, apart from the bit to do with the lower iron ore price. So that's what I said. Okay, question here on the Accent Group, which is AX1 from Tony.
I have looked them up before, but they're not a company I know well. So let me have a quick check. Okay, Accent Group, 12.8% upside, $2.50 is a target. You know much about them, Paul?
Sorry?
Do you know much about Accent?
No, not a company I'm that close of, but look, we see the analysts have got some upside.
No.
Question here from Chris. Are you buyers of JB Hi-Fi after today's drop? Many thanks, Chris. I think you'll find the drop is because it's gone ex-dividend. It's quite a big ex-dividend. So whenever stocks go ex-dividend, they'll lose that amount of the dividend plus probably a little bit more for franking if they're franking. So that's why the price is lower. I think JB Hi-Fi is a great company. So this is back towards $45 is sort of back towards buy zone. Peter, you have views on that?
And historically, this company does this. If you look at the chart, the two big peaks, up and down, then it drops, and then up and down, then it drops. I just think it's a company that you should have in your portfolio. And if you can buy it at lower prices, what's its maximum price? It must be around 54, 53.
54, 55, I think it got to.
And so if you can get in at $47, you make $7 on 47. That's not a bad return.
Okay, a couple of questions we've had on ResMed. We're just running out of time here, Peter, but your thoughts on ResMed? I know it's had a good run. It's had a huge run, ResMed. Do you think it's a buy for long term? Well, look, I think it's a great stock for your portfolio long term. It's pretty pricey up here at near $40. I remember when I started talking about ResMed about $7, Peter, and I thought it was pricey then.
It's a very good management, very good product. Analysts think 4% downside. Paul, my strategy with ResMed has always been wait for the market to get really nervous about it. They smash it. That's the best time to buy it. And then the company just comes through and proves the market was excessively negative. At this point in time, I would say that's a pretty high price to come into. Not that I don't think it'll be higher, because if you look at the pattern, it does go higher. But I think this is probably a very steep price to buy.
I think it's worthwhile pointing out that ResMed, it really takes its primary listings now in the US, and it really takes the price here is just a reflection of what's gone on in the US the night before. And so that means it does get caught up a lot in terms of US sentiment, what's going in the healthcare sector in the US. So it's not always a reflection of our market. So that's my only caveat on ResMed. Okay, and just running out of time, Peter, a question here on 3DA.
Which is a company we have covered lately, 3DA. Don't think the analysts cover it, but we'll check. No, they don't cover it. It's going to be something I have to carry over to next week. If JB can collect that in there, we'll have a look at maybe on Monday.
Okay, and finally, a question here from Sharon, just to round it up, Peter, which is a question says given recent falls to iron ore price and Chinese situation, would you hold BHP, Rio, or Fortescue? And any thoughts on the pre-Fortescue report, the anticipated dividend? So I'll throw that one to you.
I'm more BHP because of its diversified holdings, Paul.
Yeah, I probably look, if you want to play iron ore, and you can, you can just go to the futures market and punt iron ore. But if you want to punt iron ore, I'd go for Fortescue. Fortescue dividend will be a whopper. I just don't know what the dollars are. but I think it's out tomorrow or Monday. Look, I continue to think that BHP is the best place to play those stocks at the moment. So that's our advice. We're out of time, of course. We do keep this to exactly half an hour. We'll be back next week, Peter, but I think we're doing it on Friday because it's our start of the month. We've also got our listed investment conference on Thursday and Friday, which I think you can still register for, I think, if that's the case.
Yeah, why not?
And we've
got the Treasurer, Josh Frydenberg, is going to make an appearance, and Shane Oliver as well.
Okay, that's next Thursday, 9 o'clock virtually, and of course you can get it as a recording. But apart from that, we keep this program for half an hour. It's been great talking to everyone. Have a great week. Busy season with reporting season. Peter, you'll be back tomorrow and again over the weekend, and we'll talk to you then. Thanks for joining us, everyone. Have a great afternoon, and that's all from today's edition of Boom, Doom, and Zoom.